Skyscrapers still shine, and office windows still glow late into the night. But here's the twist, those big, game-changing decisions? They're no longer being made where you'd expect. Not in New York. Not in Silicon Valley. Try Toronto. Calgary. Montreal. That's right, there's a quiet shift happening, and it's already underway. So why are some of the biggest US companies quietly moving their operations, investments, and even top execs across the border? Is it about dodging high taxes? Political gridlock? Maybe those sweet climate incentives? Or is there something deeper, something that signals a long-term change? Because when payrolls start thinning and tech giants start packing up and heading north, it's more than just a business move, it's a red flag. And the real question no one seems to be asking is, what is Canada offering that America just lost? Number 10, Amazon Web Services. Here's the deal, US data centers are getting slammed. Sky-high power bills, fragile power grids in key tech states, and now even talk of AI usage taxes by some state governments. So why is Amazon Web Services, the world's largest cloud provider, dropping nearly $25 billion Canadian dollars into Alberta over the next decade, instead of doubling down in places like Texas or Virginia? Well, here's what most people are missing. This isn't just some expansion play. It's a strategic relocation. AWS is setting up its second Canadian cloud region, Canada West, right in Calgary. But they're not just moving data racks, they're moving long-term strategy. Why? Because Canada offers something the US can't seem to guarantee anymore: cheap, stable, green energy, and far fewer regulatory headaches. Let's be real. How many times has your state faced rolling blackouts or power grid failures during extreme weather? In Calgary, that's not a problem. In fact, they're rolling out the red carpet, government incentives, land deals, and a solid promise of energy security thanks to Alberta's booming renewables. But here's the real kicker, and it's easy to overlook: AWS isn't just trying to avoid US problems. They're building resilience. They're creating a backup, a stronghold outside American borders. So if the US suddenly tightens AI laws, or the next big cybersecurity crisis hits, AWS has a fallback. It's a bet on redundancy, sovereignty, survival. So here's a question you probably haven't asked yourself. If the world's most powerful cloud company is protecting its future by setting up camp in another country, how secure is your data, your systems, and your business if everything's still sitting in just one place? And maybe the bigger question, how many other tech giants are about to make the same move? Number 9, General Motors. We're seeing shift cuts in US factories, truck production being pulled back, and union tensions heating up. So here's a question: why is General Motors, a company that wants to find American manufacturing, now quietly channeling major investments into Canada? What do they know that everyone else is missing? Let's break it down. This isn't just about trimming operations. GM is repositioning itself. In Oshawa, Ontario, they're not downsizing, they're upgrading. Over 700 jobs and key production capacity are being shifted north, and it's not random. It's calculated. Why? Because Canada brings something the US is struggling to offer right now: fewer trade headaches, more stable access to EV supply chains, and a calmer political climate. Think about it, what if US tariffs spike again? What if cross-border auto exports get snarled in bureaucratic red tape? GM doesn't want to play the waiting game. They're making moves now, before things get worse. This isn't just a factory tweak. It's a strategic escape route. And here's the bigger picture: if a legacy brand like GM, a pillar of American industry, is starting to see Canada as a safer long-term bet, what does that really say about where U.S. manufacturing is headed? Number 8. Palantir Technologies. Governments are in disarray, trust in data is scraping rock bottom, and tech companies are constantly under fire for how they handle your information. So here's the big question: why is Palantir, one of the most powerful and secretive data analytics firms on the planet, quietly shifting its presence into Canada? No, this isn't just about dodging bad headlines. It's something far more calculated. Palantir is building its next chapter, and they're doing it quietly, carefully, and strategically. Right now, they're embedding themselves deep into Canada's booming AI and aerospace ecosystems. Take Toronto, for example. They've already teamed up with Airmatrix, a Canadian firm working on drone traffic management. But here's where it gets interesting: Palantir isn't just partnering. They're moving people, redirecting resources, and realigning their strategy north of the border. Why? Because Canada is giving them what the US isn't: breathing room. Regulations around data use are clearer. Privacy isn't a hyper-politicized war zone. And forming partnerships with the government doesn't instantly turn into a media circus. In Canada, they can innovate without constantly looking over their shoulder. Right now, Palantir is threading itself into smart city infrastructure, drone corridors, and even national defense innovation, all while sidestepping the noise and volatility of Washington. Let that sink in: a company deeply tied to US intelligence is planting digital roots in another country, and no one's raising an eyebrow. This isn't just relocation. This is quiet expansion. It's strategic hedging. It's a long-game move. And here's the part that should make you pause: if another data scandal explodes in the US, Palantir's Canadian operations won't flinch. If new AI laws choke innovation in Silicon Valley, guess what? Their Toronto engineers are already full speed ahead. More companies are starting to follow this playbook, using Canada as a safe zone for talent, stability, and next-gen innovation, while the US wrestles with its own chaos. So the real question is, how many companies have already turned north, before anyone even noticed they were gone? Number 7. Coinbase. The US crypto scene right now? It's a mess. One week it's lawsuits from the SEC, the next it's vague new rules that change without warning. Regulators are cracking down hard, but offering zero clarity in return. So here's the question: why is Coinbase, America's largest crypto exchange, quietly redirecting its brainpower to Canada? Well, here's the real story. This isn't just about setting up an extra office. Coinbase is going all in, building a major 200-engineer tech hub in Toronto, securing a special license from Canadian regulators, and treating Canada as a safe zone for its future. Why? Because in Canada, the rules are actually written down. Imagine that: clear frameworks, no guessing games, no getting blindsided by political stunts. Just a stable, transparent environment where crypto firms can build without constantly looking over their shoulders. Now stop and think about what that really says. When America's top crypto player decides to trust another country's legal system more than its own, that's not just a red flag. That's a reality check. And this trend? It's not slowing down. Number 6. AstraZeneca. Drug prices in the US are spiraling. Clinical trials are getting stuck in endless political red tape. And places like Boston and San Diego, once booming life sciences hubs, are now buried under layers of bureaucracy. So here's the big question: why is AstraZeneca, one of the largest pharmaceutical giants in the world, shifting over 700 top-tier R&D jobs into Canada, and investing more than $500 million into Toronto's medical corridor. This isn't growth for the sake of growth. It's escape. AstraZeneca is setting up a full-blown global clinical operations hub in Canada. Trials that used to be designed and managed out of the US? They're now being launched straight out of Toronto. So why make that move? Because Canada isn't just throwing around tax breaks. It's offering something far more valuable: speed and stability. Approvals for clinical trials? Faster. Support for biotech? Backed by government funding. And most importantly, Canada's healthcare regulations don't rewrite themselves every election cycle. Now picture this: one policy change in the US, just one, and a major drug trial could be delayed by months. That kind of delay can cost companies like AstraZeneca hundreds of millions. But in Canada, that risk almost disappears. And there's more: Canada is aggressively attracting global science talent. Universities are working hand in hand with pharma leaders. And cities like Toronto? They're being rebranded as the next global biotech capital. So let's really think about it: when the next cancer breakthrough, the next game-changing vaccine, or the next generation of personalized medicine isn't being discovered in New Jersey or Chicago, but in downtown Toronto, what does that mean for the future of global healthcare? And if a company as massive as AstraZeneca is planting its future there, how long before the rest follow? Number 5, Microsoft. Energy costs are exploding in US tech hubs. There's a growing battle over water rights, especially for cooling massive data centers. And in places like Arizona and Georgia, the locals are starting to push back. They're asking, why are these tech giants sucking up so many resources? So what does Microsoft do? It drops $500 million into Quebec. But make no mistake, this isn't just another expansion. This is insulation. Microsoft is building multiple new Azure data centers in Quebec, and the reason is crystal clear: the province runs almost entirely on clean, renewable hydropower. That means energy that's cheaper, greener, and, most importantly, politically safe. But here's the real question: why would one of the most powerful tech empires in the world start building outside its own borders right now? Simple. Because Canada is becoming a digital stronghold. In a world where AI is exploding, and cloud infrastructure is the new battleground, Microsoft isn't waiting around for the next power grid failure, lawsuit, or anti-tech headline. Quebec offers them what the US can't always guarantee: predictability. White heavy checkmark: clean, stable energy. White heavy checkmark: a fast-growing tech workforce. White heavy checkmark: no grid chaos or surprise legislation. If something shakes the US digital backbone, whether it's a cyber attack, new regulation, or geopolitical turmoil, Microsoft's data? It won't even flinch. Why? Because it's already backed up in Canada. So the next time you hear about a flashy new data center being built, don't assume it's just about scaling. It's about survival. Microsoft isn't just expanding, they're bunkering down. And here's the bigger picture: Canada isn't the backup plan anymore. It is the plan. Now ask yourself, how many other tech giants are making the same move, just without the press release? Number 4, JP Morgan Chase. Compliance costs are skyrocketing. US financial regulations seem to change with the wind. And let's not forget the ongoing tug-of-war with employees who still don't want to return to the office. So, what's the move for JP Morgan Chase, the biggest bank in America? They're quietly shifting hundreds of high-level roles to Toronto. This isn't speculation. It's already in motion. JP Morgan has been building its Canadian footprint for years, but recently, it hit overdrive. They're not just hiring in Toronto, they're increasingly making it mandatory for certain roles to be based there, not in New York. Why? Because Canada is emerging as a financial safe haven. Toronto's regulatory landscape? Stable. Predictable. Calm. No surprise rules dropped overnight. No dramatic political stunts that turn compliance teams upside down. And for a global bank moving billions every day, that kind of consistency isn't optional, it's mission critical. But here's where it gets really interesting. Toronto isn't just a cheaper option. It's becoming a top-tier financial hub, with elite talent, a thriving fintech scene, and lower salary expectations than Wall Street. It's not about slashing costs, it's about building smarter. And here's the truth no one wants to say out loud. JP Morgan isn't just expanding in Toronto. They're centralizing their tech, compliance, and core finance functions, roles that once lived in New York, Chicago, or San Francisco, are being shifted north. Why keep overpaying in volatile US cities when Canada offers peace of mind, talent, and long-term ROI? Now ask yourself, if America's largest bank is preparing to operate globally from Canada, how long before the rest of Wall Street follows? This isn't just a move. It's a message. Number 3, Blackstone. Commercial real estate in the US is in free fall. Interest rates are choking off development. And in major American cities, downtown towers? They're turning into ghost towns. So here's the big question, why is Blackstone, one of the largest private equity giants in the world, shifting more of its real estate power into Canada? This isn't a temporary hedge. It's a bold, calculated power play. Behind the scenes, Blackstone has launched a full-scale office in Toronto. But they're not just picking up properties, they're seizing control. Warehouses, multifamily housing, logistics hubs, you name it. They're locking in long-term assets in Canada's most resilient, high-growth sectors. So, what do they see that others don't? They've figured it out. While the US housing market swings wildly between booms and busts, Canada, especially Ontario and British Columbia, offers steady, high-return growth. There's surging immigration, a growing population, and rental markets so tight, you're lucky to even find a unit. In cities like Toronto and Vancouver, rent prices aren't falling, they're skyrocketing. And Blackstone isn't sitting around waiting for US cities to fix their downtowns or reverse the tide of urban decline. They're doubling down on Canada, because while the US works on solving overbuilding, high crime rates, and vanishing office demand, Blackstone is focused on winning the next frontier. This isn't a retreat. It's an offensive move. They're betting on Canada's next generation of renters, its e-commerce infrastructure, and high-density urban growth, while some of America's biggest cities can't even fill their office space. And here's the thought that should keep other investors up at night. What happens when global capital decides US markets are too unstable for long-term bets? We're not predicting it. We're already watching it happen quietly, deliberately. And Blackstone is leading the charge. Because while others try to repair the old system, Blackstone is already busy building the new one. Number 2, Sanofi. Vaccine shortages. Endless delays in US biomanufacturing approvals. And a fragile pharma supply chain that completely collapsed the moment a global crisis hit. Sound familiar? But here's what might really surprise you. Sanofi, one of the biggest pharmaceutical companies on the planet, isn't just tweaking its operations. It's going all in, building not one, but two massive vaccine production facilities in Toronto, with a combined investment of nearly 930 million Canadian dollars. Let that sink in. Why would a global pharma giant choose to plant such critical infrastructure outside the US? Because they're done playing defense. Sanofi saw firsthand what happens when you rely too heavily on American contract manufacturers: delays, backlogs, political interference. They needed reliability, resilience, and Canada delivered. And make no mistake, this isn't some backup plant. These new facilities will handle mRNA-based vaccines and seasonal flu shots. Some of the most complex, sensitive, and high-stakes pharma products in existence. But here's the real twist: Canada is helping foot the bill. That's right, the Canadian government is actively funding Sanofi's expansion. Why? Because they know what's coming. Pandemics aren't rare anymore. And vaccine independence is no longer a luxury, it's a national security priority. So while the US ties itself up in red tape, delays, and politics, Sanofi now has a fully equipped HQ across the border that can keep delivering no matter what happens stateside. Now ask yourself, when did the US go from leading the world in pharmaceutical production to becoming a backup plan? This move isn't just business, it's a bold message. The companies that make your medicine are planning for the long term. And they're no longer convinced that America can guarantee speed, safety, or supply. If that doesn't make you rethink who's holding the cards in global healthcare, what will? Number 1. The wave of US tech layoffs just keeps getting bigger. Skilled workers, some of the best in the world, are being let go in droves. And cities once celebrated for their innovation, like San Francisco and Seattle, they're now seeing talent drain out and office buildings sit empty. So here's the real question. Why is Intuit, the $160 billion powerhouse behind TurboTax and QuickBooks, shutting down offices across the US, yet doubling down in Canada? And no, this isn't just some experimental side move. This is a full-on pivot. Intuit is consolidating its US footprint, goodbye Boise office, and aggressively hiring in Toronto instead. Not for call centers or customer support, but for the core stuff: engineering, AI development, product innovation, design, the brains of the business. They just opened a cutting-edge tech hub right in the heart of downtown Toronto. And guess what? It's buzzing. So what's pulling Intuit north of the border? 3 big reasons. Backhand index pointing right workforce stability. Backhand index pointing right access to top global talent. Backhand index pointing right and immigration policies that actually support growth. While the US ties talent up in red tape and visa chaos, Canada rolls out the red carpet. While US cities are slashing office space and pulling back, Toronto is scaling up, and Intuit is riding that wave. But here's the kicker. Intuit isn't just hiring in Canada. They're building there. That means the next TurboTax upgrade? The next leap in QuickBooks AI? Could all be made outside the US. Let that sink in. A proud American fintech company is placing its future in Canadian hands. And no, this isn't a one-off. It's a blueprint. Other major firms are watching closely. Because let's be honest, these companies aren't leaving the US because they want to. They're being pushed out by rising costs, broken systems, and talent shortages. So now the real question is not whether more companies will follow, but how soon. Because right now, the biggest players in the game are making moves quietly, but the consequences are loud. And Canada? They're cashing in.